What's up, investors? It's the Russian dude, and recently hedge fund managers, they started selling billions of dollars worth of their investments. So the only reasonable question is, do they know something? Are they preparing for something? Today we're gonna talk about this topic and how you guys can prepare for what's coming as well. And so yeah, for the last several weeks, hedge fund managers, they were actively selling their investments. In fact, it has been happening for already many weeks, but just several weeks, couple of last weeks, it literally intensified. What we're seeing right now is the fastest pace of hedge fund managers selling investments since 2022, and just for comparison reasons, last week they sold $7 billion worth of their investments, yes, in 1 week alone, which is the number higher than the entire sales for 2015. And one of the biggest positions which they were selling was the big tech, those magnificent 7 companies, while simultaneously publishing articles online in different media sources how good of an investment right now is, I know, Tesla's, Microsoft's, Nvidia's, Google's, and so on. So they were literally hyping those companies, increasing the price, while simultaneously selling them. But guys, since you've been watching my channel for quite some time already, you already know that we talked several times how specifically these magnificent 7 companies were overvalued. So I was talking about multiple times that it is not a good investment opportunity, at least for the near future. Well, now we can see that the Wall Street catches up as well. And so here are at least 2 main reasons why hedge fund managers were selling so much of their investments in the last several weeks. The reason number 1 is, yes, they do know that those big tech companies, they are overvalued. Specifically, we've been talking about that just top 10 companies of the S&P 500 were representing like 25% or so of the entire index. This is one of the biggest representation in like couple of decades, to say the least. And in the meantime, small cap companies, primarily from Russell 2000 index, were severely undervalued because they already went through the correction which almost no one felt. Because those big 10 companies, they were pulling the entire market with them, while the majority, 90% of the market, was already in the correction zone. And so hedge fund managers, they're pretty much rotating their cash from overvalued big tech to undervalued small cap companies. And the reason number 2 why they were doing this, it is because of huge uncertainty of the upcoming presidential elections in America and just in general geopolitical risks. Obviously, we do not know yet who is going to win in American presidential elections in November, but despite this, whoever is going to be the next president, most likely during the very first month of the rule, they will do some significant external policy changes, whether this is related to China, to Russia, Ukraine, Europe, you name it. We obviously don't know what these policies are gonna be. For this reason, hedge fund managers, they just prefer to just be safe, sell already overvalued investments, and just maybe if not purchase undervalued companies, but at least to have a lot of money at their disposal in case there are some interesting opportunities on the market. So what I mean by all this is that it does not look like that we are in the bear trend, it is just a simple reallocation of capital. Hedge fund managers, the Wall Street is usually one of the first ones to react when something like this is happening, and then it is just us, retail investors. Unless you've been watching my channel, we've been talking about those things weeks in advance. Guys, so by the way, if you're interested to continue seeing such videos, please subscribe to my channel and like this video. But basically, yeah, the whole idea is to have enough cash at your disposal if something interesting, if some particular sectors, industries, if some particular companies lose a lot of value without any significant reason, this is when these hedge fund managers, they just swoop in and they buy cheap stocks. And the way you guys can respond to the things that are happening right now, if you are an investor, first of all, is to just do nothing. I am an investor myself, long-term investor, so I just dollar cost average, buy the same companies every single month, spending the same amount of money. I do not care about this volatility, fear on the market, no. In fact, I prefer when the market goes down significantly because I can pick up my favorite companies at a bargain price. But if you are a trader, if you want to extract profit from volatility, I'm not promoting this behavior, I'm not a trader, but in case you just cannot wait, if you're impatient, if you want to just do daily trades, yeah, once again, take a look at some undervalued companies from small cap stocks. Not gonna suggest you any individual companies, I don't even think it is legal, but I mean, if you're a trader, you'll know exactly what you are doing. And to sum up, according to Goldman Sachs analysts, they see that the correction in the S&P 500 and at this point in the entire stock market in America, according to them, is inevitable. So pretty much yes guys, thank you so much for watching, like this video, subscribe to my channel if this was interesting, informative for both. See you on Monday.